Welcome back everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. And it looks like it may not be a red wave in the US midterm elections, but it's clearly a red wave on the Lal Street today. We started off the day on a very, very strong footing, but it seems like bulls could not or were not able to sustain their hold on the market. And we have witnessed some bit of profit booking in this market at this point of time. If you look at the Nifty and Sensex, they've given up all of their gains, and at this point of time trading almost 0.4% lower. The selling pressure in mid and small cap stocks is absolutely immense at this point of time, quite largely underperforming the large cap peers. And some of the sectors where you are seeing selling pressure, automobiles, pharma, real estate stocks, are some of the major laggards in this market, Santo. So clearly the euphoria or the exuberance of the morning, where we seemed like we would be inching closer to the record high, it seems like we have fallen actually much below the 18,200 mark that was so sacrosanct for the market.
Well, CJ, some bit of profit taking is only to be expected, given that prices have run up quite a bit over the last couple of months. But more than that, it seems to be acting like some kind of a self-fulfilling prophecy. You know, in the previously 18,200 was a strong resistance mark. So closer to that, I think a lot of players are taking profits, which in turn then is triggering further profit taking. It seems to be reinforcing the view that 18,200 is indeed a strong resistance level. But from the look of it, it does seem that this momentum is pretty strong at this point in time, and after some initial hiccups, probably you could see the markets trending higher only because the mood in global markets still remains upbeat at this point in time, CJ. Quick check on the derivative market. We are seeing short positions being built up in futures of Dr. Lal Pathlabs, MRF Metropolis and Jubilant Foodworks. Dr. Lal Pathlabs, the numbers were below what market was expecting, and also the management commentary did not seem all that inspiring. Long positions are being seen in futures of PI Industries, Punjab National Bank and Adani Ports. Some bit of short covering was seen in futures of Bosch.
Well, Santo, the market, it seems, is a little nervous at this point of time. It seems we are seeing a little bit of profit taking, but one stock that has been in the news today is Jubilant Foodworks, the franchise owner for Domino's Pizza in India, and the stock took quite a hammering, despite the fact that the earnings were quite good. I mean, it looked quite decent to me. Why do you think that we saw a hammering on the stock today?
Well, I think for one, the top line growth has been pretty much range bound in the last 3 quarters, while on the margin front, the fall was not as severely as what market had feared. But still it is way off the lows of what we had seen last year. So there's been some impact of inflation clearly, and by and large the analyst commentary is that the revenue per store was slightly below market expectations. Also the high input cost is clearly now reflecting in the for instance, the high cost of cheese, that is clearly showing up in the operating profit margin. And besides, probably there could also be some kind of resistance from the consumer level also. And now the new CEO, he has said that initially the focus would be on refining the process rather than any dramatic overhaul, which partly seems to make sense also. And if you look at the way in which the stock price has fared over the last 6 months now, almost 6 to 8 months, I think the market seems to be saying that we'll really wait for some clear signs of an improvement in the numbers before we once again decide to give it a rich valuation, as has been in the case, as rich as the food that Jubilant Foodworks sells.
Well, I will absolutely not want Domino's to cut down on the cheese intake, on the pizzas. But that's it. I think if you look at the commentary coming out from some of the brokerages that have a very positive outlook on the stock, they are indicating that the store addition growth remained quite strong for Jubilant Foodworks in the second quarter, and it is likely to be possibly one of the levers that will aid growth or enable growth in the second half of FY23. Elara Securities is of the moment that is of the view that growth momentum will pick up in the second half, probably also aided by the fact that raw material prices will most likely fall on a sequential basis, and thereby aiding the margin performance. But overall top line growth is something that Elara Securities is expecting will pick up in second half of FY23 also, because October was the major festive month for Jubilant, so clearly that will have some bit of tailwind into heading into the December quarter earnings. Apart from that, Elara Securities believes that in the longer term, you would expect that Jubilant Foodworks same-store sales growth numbers, they will now start outperforming the industry because of the aggressive store additions that the company is undertaking at this point of time. So clearly, Elara remains quite positive on the stock, and some of the other analysts, if you look at the Bloomberg consensus as well, majority of the analysts are still have a buy rating on the stock. So overall, the growth outlook does not change much. But yes, in the near term, it seems like the market was expecting too much out of the company Santo in the second quarter, and the company could not deliver on those lofty expectations, and therefore I think we are seeing the sort of correction, almost 7%, 7.5% down now, Jubilant Foods at this point in time. So it's been a massive crack in the stock this trading session. Well, the next stock on our radar today is Aptus Value Home Finance from the affordable home finance segment. Now, if you look at the second quarter performance, it's been quite steady, although probably not as great as, say, an Avas Financers or Home First Finance, but it's been a very, very steady quarter for Aptus Value. Brokers have said that the company continues to remain on the high growth trajectory that it has been showing for the past 2 years now. Loans grew almost 7.5% on a sequential basis, clearly very strong growth, at least on the loan disbursement front. Also, asset quality, there was no deterioration. In fact, asset quality remained largely stable, as well as the NIMs of the company. The net interest margin also remained quite stable, given the fact that cost of borrowing in general has been quite high for NBFCs. Apart from that, Kotak Equities is of the view that because of the higher NIMs that Aptus Value has been delivering, that will provide some bit of buffer in case you see some sort of asset quality troubles coming in the future. Even then, it will provide buffer to the current return on assets that the company is delivering, that is about 5 to 6%. So overall, the outlook still remains quite positive. Brokers have largely retained their positive call on the stock, and I think this is one stock to look out for in the second half of FY23, Santo.
Well, if I were to just describe this stock in just one word, I would say that it's been consistency in earnings. The earnings part, at least, they've been consistently delivering, no dispute on that one. The only thing is that now with interest rates steadily going, it hurts both in terms of rising cost of funds for a player like Aptus, and secondly, remember there's the affordable housing finance, housing segment, which is also very sensitive to increase in EMI rates and all that. So in theory, while at the lower end, affordable housing has been the segment which has been growing, consistently growing, at some point we have not seen this kind of increase in interest rates for some time. So that is what I think the concern of the market, given the way the stock has fared since listing. It had hit a high of close to about 355 plus, but since then it's never gone to that level.
Absolutely, I think higher interest rate will be a concern, although so far we have not seen almost 190 basis points of rate hike so far transmit into higher similar quantum of increase in home loan rates, and that affecting demand. It seems like most of the management commentary listened to, even from the banking side as well, they so far remain quite confident. Even SBI had the other day said that they have so far not felt any sort of impact from higher interest rates as far as the loan book is concerned. And let's not forget, one of the big driver for SBI's loan book has been the housing segment. So clearly, at this point of time, it's not impinging upon growth. But yes, as Santo mentioned, I think it remains one of the concerns for the market and one of the reasons why the stock may not be giving the sort of returns that the earnings performance justify.
Well, CJ, often this price action seems to indicate something. If prices are continuously rising despite bad news, or if prices are falling despite the news being positive, for some reason nobody has been able to figure out. The market somehow seems to sense something which is not really captured by the balance sheet and profit and loss numbers.
Possibly, Santo, possibly.
So CEAT is the next stock on our watch list. Decent set of numbers there. The margins have clearly shown an improvement quarter on quarter, but at the same time, year on year, it's still down. But at the same time, the company's margins are expected to improve from here on, given that commodity prices have been quite stable. Besides, commercial vehicles have been selling quite well, and that is the main bread and butter area for CEAT Tires. 45% of its revenues come from that. But the key triggers for CEAT going forward could be the fact that it is now trying to step up its presence in both the four-wheeler, two-wheeler, as well as off-the-road tires segments, which offer better margins. Besides that, according to the Moneycontrol Pro team, the company's major capex plans are now behind. So now it's time to reap the benefits of all the excess the capacity that they have built in place now. Besides, the stock is quoting at about 14 times estimated FY24 earnings, which is fairly reasonable.
Well, Santo, I mean, at this point of time, the market clearly is in the favor of CEAT, higher by about 5.5% right now. But I have a very interesting contra position coming out on CEAT, and that is coming out from, Kotak Institutional Equities, who have retained their sell rating on the stock. They believe that the best of the earnings performance for CEAT is probably factored in by the market already at the current market price. If you look at the reason why they have retained their sell call, they believe that the company has shown an innate inability to generate free cash flow at this point of time, and given the fact that it is trading at a discount to some of the peers, like say for example MRF, where it is at a major disadvantage in terms of valuation. I think that disadvantage may not go away anytime soon, given the fact that the return profile of CEAT remains quite inferior to a stock like MRF. So Kotak Equities has therefore retained their sell call, and they do not at this point of time buy the hype that we are seeing in the market on CEAT so far, Santo.
Well, for someone who's been holding the stock for 5 years, still it's nowhere close to the peak. The stock had topped about 2,000 rupees way back in, I think, 2017 or 2018.
Right. During the previous auto cycle, of
exactly.
course, yes.
So the stock is still some way off from its peak at this point, and the point you mentioned about the margins being at a lower than that of MRF, clearly perhaps that's where also the opportunity lies.
Perhaps. I mean, we'll have to wait and
when
see
there's
how
a reversion to mean happens.
Yeah, I mean, how much the market will appreciate the story, and for how long the market will appreciate the story. That is something to watch out for. And I think probably, at least if not from a long-term perspective, maybe from a tactical perspective, this could be a stock to watch out for. Another stock to keep an eye out on would be PB Fintech. The company's business momentum just keeps on delivering at this point of time. I mean, of course, after the poor show probably in the December quarter of last year, the past 3 quarters we have seen quite steady improvement as far as the business momentum of PB Fintech is concerned. If you look at the second quarter, premiums grew about 79%, of which almost 50% accounted from or were from renewals. So renewal momentum also remains quite high for the company, and the company has come out and said that they expect to break even on an adjusted EBITDA basis in the March quarter itself of FY23. So that is very, very good news. Apart from that, they have also indicated that they might turn profitable on a net basis, that is on the net profit line in FY24 itself. So that is much ahead of what a lot of analysts were expecting, and one of the reasons why Kotak Equities has retained a buy call on the stock with an upside of as much as 88% in just the next 12 months. So clearly, if PB Fintech can deliver or execute on its guidance, I think this is one stock to watch out for, apart from Paytm, Santo, that I spoke about in the morning.
Yeah, CJ, but see, the company has managed to narrow its losses, but again, if you look at how by the quantum in absolute terms by which it has managed to narrow the losses, it's not pretty much. It's not there. That's one part of it. Second, like for Paytm, there is some concern that probably once this lock-in of pre-IPO investors gets lifted, you could see a deluge of shares flooding the market, which is what probably is keeping investors on the sideline. Lastly, just look at the price action here. It's down by what, 1300 plus something was the peak, and now it's quoting close to 400, and the stock has been steadily trending lower, which shows that market, in this case at least for PB Fintech, is waiting very clearly for some significant improvement. Now the company has said that it will turn net profit positive in FY24, but looking at the quantum of losses, at least it seems a tall order, and that's what the price seems to be saying, CJ.
Yeah, I think, Santo, the technical factor around the the supply of shares that are due probably later this month, I think that is something that is really keeping the stock at a lower end. But I would also feel that given the fact that the stock is already down almost 70-75% from the record high, the risk reward is in the favor of somebody who is going to willing to take the contrarian bet on the stock, instead of betting the stock will go even lower from current levels, especially on the fact, or at least on the evidence, that quarter on quarter the business is showing signs of improvement instead of signs of deterioration. So going short on PB Fintech at this point of time may be more risky than going long, at least as far as mean reversion is concerned. So that would be my limited point.
CJ, you've heard of the saying, a stock that's down 95% is actually something which first fell 90% and then fell another 50% from there.
Absolutely, absolutely.
So last stock on a watch list this afternoon is Godrej Consumer. Weak set of numbers there, but again, even in those weak numbers, they were broadly in line with what market had been expecting. The management commentary though is fairly positive. The CEO of the company was on CNBC TV 18 earlier during the day, and he said that there will be a significant improvement in gross margins during the second half of the year. You see strong growth coming in from both Asia and Africa, at least from India and Africa, sorry. And in India, he expects a significant double-digit growth in value terms. So things slowly looking up for Godrej Consumer, and the easing of raw material prices too should give significant tailwinds to the margins.
Yeah, but if you look at the price reaction, Santo, clearly the market at this point of time still remains a little unconvinced as to the pace or acceleration of improvement in Godrej Consumer. The home insecticide business clearly did not do that well in the second quarter, and I think that would be a big concern. But overall, I think this is one stock that probably still remains quite lower on the pecking order as far as the FMCG space is concerned. I think there at this point of time, the kingpin remains ITC, and that is the stock that everybody wants to be finding recluse in given the volatility in the market. That said, let's quickly take some of our viewers' queries on the show. A lot of you have been posting your comments, and please continue to do so. You can utilize the hashtag AskMC to provide your stock queries, your opinions, your thought processes on the show and everything else. Santo, one of our viewers wanted our thoughts on PI Industries. Now, the stock has done incredibly well today in the session. If you look at the stock, I think it's higher by about 9 to 10% in trading after a very spectacular set of numbers coming in for the second quarter. And I think this is one of those companies benefiting from the agrochemical revolution. The outlook for the agrochemical space remains largely quite strong at this point of time, and also the troubles that one of his rivals UPL has been going through with respect to its own net debt. I think investors probably are finding refuge or haven in PI Industries, given that that's another way to play the India crop protection story that is expected to be a very big market going ahead. So PI Industry clearly a differentiated play, a very high margin play, and clearly doing quite well. If you look at the net sales for the September quarter, higher by about 31%, net profit jumped about 46%. So if you get those sort of numbers on a quarterly basis every quarter, clearly the stock is in for a long haul for good days, Santo.
Yeah, and margins have been able to maintain at 24% in the second quarter, and this was typically a quarter when you saw most other chemical names, even some of the leading names like SRF, actually report a slight decline. So that also should improve sentiment, investor sentiment for the stock, and we've seen some surge in trading volumes also in the stock. Probably at this stage we don't know the identity of the buyers, but the volume seems to indicate that there is a lot of interest at this point.
Well, Santo, I think that is it in terms of viewer queries. Let's quickly take a look at the market and how we are doing, and it's not looking great. I don't think we have seen any improvement even after the 3 o'clock move, the so-called 3 o'clock move, Santo.
Yeah, Tata Steel down by close to about 1%, NTPC is down by a little over 1%, ICICI Bank is flattish, ITC is marginally up at this point in time.
Yeah, clearly outperforming. I think everybody's favorite stock at this point of time in ITC, and I think because of that, you're seeing the Nifty FMCG index also in the green territory. I think if you look at the volatility index, Santo, that is very interesting. The volatility index has actually jumped up about 2% today in trading, about around the level of 15.92, clearly indicating that some bit of put option buying is happening. Some of the investors or traders are getting a little wary of the fact there could be a correction around the corner, given the one-way street that it has been for the markets ever since we dipped towards that 17,000 mark and then made a very quick reversal. But the mid-cap and small-cap space remain the story today. Quite a good correction coming in there, underperforming the Nifty 50 at this point of time. And sectorally, I think the Nifty Auto Index and the Nifty Pharma Index are the one that are really taking it on the chin. The Nifty Pharma Index is now down almost 5 to 6% in the past few sessions, clearly with the pharma sector earnings slowing down, not only on the top line front but as well as on the net profit front. So that is one sector, Santo, that has not been favored by investors at this point of time.
Well, and with that we are almost to the fag end of the earnings season. Just a few more numbers left, CJ, and which are those?
Well, Santo, I think today, of course, a major number in the from Tata Motors will be coming out, so investors will be reacting to that tomorrow morning. Apart from that, tomorrow we have Eicher Motors coming out with their Q2 results, as well as Page Industries and the new age tech giant Zomato also releasing their second quarter numbers. So those will be the numbers that investors will be eyeing tomorrow. Besides that, In the US, of course, you have the October inflation data coming up, very, very crucial economic data for the global markets. That will be coming out tomorrow, along with the initial jobless claims data for weekly jobless claims data in the US. So Thursday would be high on earnings as well as on economic data points, and it could probably be a setup for the rest of the week as well as the next week for the market. So those are the things to look out for, Santo.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for writing in, and as always, please continue to do so. We'll try to answer your queries to the best of our ability.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow at 9 a.m. Till then, have a great day.